Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. It's a fresh new week and fresh new day. We have a lot to catch up on as far as the cues overnight from the global markets are concerned as well. But as always, let's take a look at what the Asian markets are doing. Largely lower after a weak handover or a mixed handover, so to say, that we got from the US markets. We're awaiting the inflation print from the US markets tomorrow. That's the 14th of Feb, ahead of which there is some nervousness across the globe. So Taiwanese index is down around 70 points. We have Hang Seng, which is sitting with cuts of around 150 points. So that's a 0.7% cut as far as the Hang Seng is concerned. We only have Shanghai, which is in the green right now. But apart from that, there is Nikkei, which is down 1.5%. Kospi is down 1%. We also have Straits, which is sitting with cuts of around 0.5%. The SGX Nifty will come up for you, which is indicating that the start for this week at least will be a little bit in the red. A 30-point downtick is what this one is suggesting. It has recovered a tad bit, but yes, continues to show that the start could be in the negative for our own markets. Let's talk about the US markets now. Wall Street ended Friday's trading session mixed, with the Dow Jones closing nearly 170 points higher, the S&P finishing flat, and the Nasdaq closing over 71 points lower. Despite Dow's Friday gain, it ended the week in the red, while the other two key Wall Street indices posted their worst week since December. S&P lost a little over 1%, while the Nasdaq Composite gave up over 2% last week. Let us now get to the final update in our global market wrap this morning. European markets ended the week's last trading session lower, with the French CAC down 58 points, the German DAX sliding over 1.5%, while the British FTSE closed with a 29 points cut. The UK economy posted zero growth in the fourth quarter, narrowly avoiding a recession. Remember, the Bank of England last week forecast that the UK economy would enter a shallow five-quarter recession in 2023. The British GDP, meanwhile, shrank by a larger than expected 0.5% month-on-month in December after 2 months of unexpected growth. The Central Bank of Russia left its key interest rate unchanged on Friday, and the bank cut rates 6 times in 2022, taking the key rate from 20% in February following Russia's invasion of Ukraine to 7.5% in September. Okay, that's the global market action. How will these overnight cues impact our own markets? We have our research team joining in to tell you just that. This is our Power Prep segment, where we'll tell you all about the trade setup, the stocks which are in focus, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. What is the market setup looking like today?
Well, the whole of last week was fairly quiet for a market, range bound, and this morning the cues that we've got from the global markets, US was a mixed picture, but Nasdaq sold off nearly 2.5% last week. So in comparison, the Indian indices, particularly the Indian IT index, has done pretty well. As you pointed out, the big cue this week will be the US Consumer Price Index. It will be published on Tuesday. Economists see US inflation slowing down to 6.2%, which could be the lowest reading since September of 2021. Escalating tensions between US and China could also keep Asian markets, particularly Hang Seng and Shanghai, under check because of the spy balloons which are getting shot down. Crude prices have inched up to $86 per barrel. The SGX Nifty is suggesting a mildly lower start. The India CPI inflation will be out at 5:30 p.m. On Friday post-market hours. We had the December IIP bang in line with street expectations at 4.3%. The mid-cap index showed some momentum last week. So even as the Nifty was flat, the mid-cap index was up more than 2%. On Friday, we had the DII selling 291 crore, but the FIs bought nearly 1,458 crore in the cash market, and this is the first buy figure since the 1st of February on budget day. After that, 1st Feb, we had a buy figure from the FIs, but thereafter it was all sell, and finally we saw selling pressure abate, and on Friday we had a buy figure. So that's going to be an important monitorable to track. Now, the earnings season is almost winding down, so the focus is going to be more on macros. As I said, the US CPI inflation is going to be key. We'll be watching out for how the FI flows pan out from here on. In terms of support, the Nifty support is seen at 17,651, which was the intraday low on the Nifty last week. 17,651. On the way up, it will be 17,950 to 18,000 is what technical analysts seem to suggest. Back to you.
Okay, all right. So those are some important levels to watch out for as far as the Nifty is concerned. Thank you, Rima, for that. But a lot of stocks that will continue to be in focus. Vivek has that list. Vivek?
Absolutely right. So many results that come in post-Friday. So what we're looking at, number one, is InfoEdge. Now, InfoEdge actually has delivered a slightly muted quarter, also impacted by the fact that there was a one-time loss this time around. So revenues up almost 40%, EBITDA up 60%. However, the management has indicated that IT hiring has slowed down quite significantly. Metropolis Healthcare, a muted quarter from the company this time around. Revenues down 2.5%, EBITDA down 6.5%, and profitability down almost 13% on a year-on-year basis. BHEL and optically a very strong quarter. However, brokerages had indicated that this could be multiple one-offs that helped and aided the company's earnings this time around. Profitability up almost 56% on a year-on-year basis. Nalco, year-on-year, there has been decline, but the company's results have been marginally above what the street was anticipating. Revenues down 12.5% on a year-on-year basis. EBITDA down 61%. Profitability down almost 70%. JK Lakshmi Cement, a good growth year-on-year, slightly has mixed analyst expectations. Revenues up almost 21.5%. EBITDA up 7% and profitability up almost 19% on a year-on-year basis. PB Fintech, total revenues up 66%. Adjusted EBITDA margins, continue to remain negative at -5%. However, the management has maintained its guidance of 1,000 crores profitability by FY27. Balkrishna Industry, a muted set from the tire maker this time around. Although the revenues were higher by 6.5% on a year-on-year basis, EBITDA is down almost 40% and profitability down 68%. A couple of other stocks that will remain in focus on the back of news flow. In Coforge, expect a large block deal. Bearings PE is the likely exit as far as this particular block deal is concerned. And Adani Group stocks will continue to remain in focus. There have been additional pledges done by the company in multiple group companies, and also rating agency Moody's has cut the outlook on certain certain company bond as well as ratings that they have. So the outlook has been revised to negative from stable stance that they had earlier.
Okay, all right, Vivek, thank you so much for that list. Let me go across to Nigel now. He's joining in with all the cues from the FNO space. Hey, Nigel.
Hey, morning, Sonal. A couple of cues that came in Friday's trading session. One was the premium on the Nifty that came in lower, telling you there were some shorts that were getting piled up. And the second factor was on the Nifty Bank. It ended more or less flattish, but open interest was down by more than 7%, telling you that maybe there was a bit of a short covering bounce that did play out there. Let's focus on what the FIs did in the FNO market. Well, on index futures itself, they added some shorts. Close to 10,000 short contracts is what they added. And appeared they were shorting the Nifty now, going by the data points that we did have. On the option side, there's no big direction that's coming out there. They bought more puts than calls. They bought them in the ratio of close to 2 puts for 1 call in case things go wrong. There's some kind of cushion on the on the put side. While on the writing side, well, they wrote an equivalent number of calls as well as puts. 1.2 lakh shares, or that's 1.2 lakh contracts. What did it do in the on the option side though? That's going to be quite important. And since the Nasdaq is under some pressure, the Nifty IT index as well could be under some pressure. So the Nifty Bank becomes extremely important. The 41,500 put, well, out there, the total open interest was up by close to around 15 lakh shares. There was a sense there was writing out there. So for those writers, they're counting on the 41,200 odd level holding out. On the Nifty, well, the 17,800 put as well as call were fairly active in in Friday's trading session. And there was some writing that we saw at both these two strikes. For those that are working for a bigger move on the Nifty, well, the 17,600 and the 18,000 call, they got bought into. Plugging in these numbers, though, going by particularly the writing action that we saw, the 20 and the 100 DMA, both on the Nifty as well as the Nifty Bank, both of them will be the resistance levels. However, in the near term, support for the Nifty buying around that 17,750 has worked for the last couple of sessions. So that becomes a crucial stop loss out there. While on the Nifty Bank, since the 41,500 put was seeing a fair bit of writing, 41,200 becomes important. For starters, the SGX Nifty was suggesting a mildly green start. Now, in fact, it's moved into the red. So let's see whether or not that buy on dips that played out the last couple of sessions works today as well.
Watching Power Breakfast on CNBC-TV18, while market regulator SEBI will soon conduct a forensic audit of all 44 mutual funds, it has already invited expressions of interest for the exercise, which will use data-based analytical tools to focus on due diligence and risk management of mutual fund houses and the industry as well. With that, let's move on and listen in to the RBI Governor Shaktikanta Das give his views on the global economic outlook and recession concerns as well.
Our inflation projection of 5.3% for the whole year 23-24, we have said that the risks are evenly balanced. That the global economic outlook does not look as grim as it did, let's say, about 6 months ago. The talk of a deep recession in many countries, including advanced countries, that is behind us. Now, the talk around the world is either a softer recession or just a global slowdown.
And ahead of the Supreme Court hearing on the Adani Hindenburg issue later today, the finance minister reaffirmed that Indian regulators would take care of the matter. Let's listen in.
India's regulators, and I'm sitting in the company of a very senior regulator, one of the oldest regulators in this country. India's regulators are very, very experienced, and they are experts in their domain. So the regulators are fairly seized of this matter, and they are on their toes, as always, not just now. So I would leave it there, because you've just told me what has come out this morning. I'll leave it there.
All right, that's the word coming in from the Finance Minister. With that, we'll move on. The Aero India 2023 kicks off today. Prime Minister Narendra Modi will be in Bengaluru today to inaugurate the event, which is also the biggest of its kind in Asia. Ahead of the event, my colleague Parikshit Luthra spoke to Mats Pamberg, who is the CMD of Saab India, and began by asking him about what the company would be showcasing at this show. Listen into what he had to say.
Our main products this year is, of course, the Gripen. It's an air show. But we are also exhibiting our ground combat segment this year. As you know, we are establishing a facility to make the Carl-Gustaf M4, the new facility, the new version of the Carl-Gustaf that has been. Previous versions have been in service since mid-70s here in India, so it's a natural continuation for us.
Right. Now, in terms of your talks with the Indian government, the Ministry of Defence, with the Navy and the Air Force, what are you offering them in terms of fighter jet technology? What is the stage of the negotiations with the forces and the Ministry of Defence?
We are in constant dialogue with all the services on our different product offerings, and when it comes to the fighter aircraft, we are still awaiting the next step in the process, but we have offered in the response we gave in 2018 more or less a complete transfer of technology. We are prepared to set up a facility here together with Indian partners that we can work with in a good way and establish a complete ecosystem to produce the fighter to as high as possible extent local content.
Right.
And we are also working very closely with our international partners that we have for producing the Gripen.
Right. Now, which would be the fighter jet technology? Would you be offering the Gripen E, the latest technology that you have?
Yes, it's the Gripen E. We have sold the Gripen E today to the Swedish Air Force. It's in operation there, and also to the Brazilian Air Force. Yeah.
Right. Now, coming to indigenization and having local partners, you did not renew your partnership with the Adani Group when it came to manufacturing fighter jets in India. Are you considering another partner? Are you at advanced stages of consultation?
I would probably like to rephrase that a little bit. It was a mutual decision not to renew the partnership at that point of time, and that was already in 2019. We are not closing any doors whatsoever when it comes to partnering going forward. We have to see how the Indian Air Force would like to play the game with the MRFA, which model they would like to apply, and so forth. So it's something that we will work on going forward.
Welcome back. Still tuned into Power Breakfast on CNBC-TV18. As promised, it's time to get to know all about the commodities space. Manisha Gupta is joining us with that update. Hey, Manisha, good morning.
Sonal, hi. Thank you so much for that. Well, we've seen nearly 8 to 9% of gains come in for the crude oil prices in the previous week. Slightly off those kind of highs right now because the dollar index seems to be inching towards 104 in trade right now. But the support comes in from the fact that the Chinese demand continues strong. Russia has cut output by nearly 5 lakh barrels per day from the month of March, and that clearly has led to premium in prices. And Russia, while of course is retaliating against Europe's ban on Russia's seaborne oil and price cap, the Saudi Arabia also raising official prices for Asia seem to be supporting the market. So buying on dips clearly seems to be a strategy that is working in case of the crude oil prices. Not so much really when you look at the gold prices, because after posting 2 weeks of declines, we've seen the gold prices open this week as well on a weaker note. The strength in US dollar, hawkish signals from the US Fed officials on rate hikes is something that continues to weigh onto the market. And add the fact that the global gold ETFs have seen outflows for a 7th straight week also seems to be weighing on the gold prices.
All right, so that's the update from the commodity space. Manisha, thank you so much for joining us. Moving on to the big global story of the devastating earthquakes in Turkey and Syria. The United States Geological Survey reported another earthquake in Turkey on a Sunday at a time when a series of earthquakes has claimed over 33,000 lives, with over 29,000 killed in Turkey and more than 3,500 dead in war-torn Syria. Meanwhile, the UN Relief Coordinator says the people of northwestern Syria feel abandoned and are looking for international help that hasn't arrived.